Well, those are the big headlines that we are tracking for you all evening on ET Now. Well, let's introduce our very first guest then on the show. We have with us to talk about the entire matter with respect to taxes and all the changes that FM Sitharaman has brought about, Sujit Banger, the founder of taxbuddy.com. Sujit, thank you so much for taking our time today to join us on the show. So Sujit, to start with, let's, especially from the point of view of ease in tax litigation, the announcements that the FM has made. In fact, post the entire budget speech, that the FM gave and delivered, we've had the CBDT chief, the tax man, all speaking about how they are, going to reopen a very limited and restricted number of cases. So for assessees, is it now perhaps going to get easier when they're fighting tax litigation?
Yeah, certainly. See, department has been consistently trying to make easier for the taxpayers litigation matters, and in continuance with that, this budget has given certain very important new changes. For example, the reopening has become now a matter of just 3 years. Cases can be reopened only to the extent of preceding 3 assessment years. Earlier, it was 6 years for the normal taxpayers. So this change is a really respite for the taxpayers. At the same time, one major change, one major in this budget is about dispute resolution committee. Now, dispute resolution committee will be very much helpful for the small taxpayers, because the disputes to the extent of 10 lakh disputed amount, and if return of income is less than 50 lakh, then the cases will go to the cases have option to go to this dispute resolution committee. And therefore, the purpose of this committee is a quick resolution to the satisfaction of the taxpayers and to the at the same time keeping the interest of revenue in mind. So it is a judicious way of matching both the points together. So that's why these two are very important changes as far as common small taxpayers are concerned, small businesses are concerned, and even individual salaried taxpayers are concerned. So litigation will be at ease 100% and certainly going forward. This is what is apparent from this budget.
All right. Let's talk about, the reopening of old cases. Sometimes, we get notices with respect to our old cases. What are the conditions now under which a taxpayer's old case may be reopened by the taxman or the department?
So, firstly, we will see what was the prevalent position. Then it will be easy to understand what change has been done. So, prevalent position was that cases could have been reopened by the taxman for preceding 6 assessment years. And if for the 4 assessment year, there was no any income limit. If it is 4th, if it is 5th and 6th year, then the income which is escaped assessment should have been more than 1 lakh. And in that case, the default should be on part of assessee. If these conditions were satisfied, the cases were reopened for last 6 preceding years. Now, in this budget, the major change which has been proposed is now cases can be reopened up to 3 assessment years. So now this 4th, 5th and 6th year, which could have been reopened as per the earlier prevalent position, now these cannot be opened. So cases can be opened only for 3 preceding assessment year. Now, as far as approval is concerned for these 3 assessment year, the approval of principal commissioner has been proposed. So that's why the more application of mind can be done while reopening these cases. One further major change which is being proposed.
I think we've just, we're facing a technical glitch with Sujit's voice, perils of live television and working from home, I guess. But just to wrap up a little bit of what he said, that firstly, yes, tax litigation will go easy on assessees, and we were just talking about the conditions under which a taxpayer's old case may be reopened. The current position is that up to 4 years, if there is income on which tax has escaped. And for reopening of in the 5th and the 6th year, then that income has to be more than 1 lakh rupees. So if it's less than 1 lakh rupees, then the case will not be reopened. Now it's become 3 years in the budget, and we'll be joined by Sujit once again to sort of speak about that a little more, because there has been changes in many things. Like, for example, all the conditions that are listed, they've become a bit more exclusive. So there are very few cases now where the income tax case will be reopened. Okay, I think Sujit is back with us. So Sujit, continue your point.
Continue with that same point. So now the present change which has brought is that, as I said, 3 years it can be reopened with the approval of principal commissioner. So what has happened is the application of mind will be done by various tax authorities in the hierarchy. At the same time, the information will be provided to the taxpayers, and the opportunity will be given to taxpayers to put their say. And that's why it is not the case will be reopened immediately. So information will send to the taxpayer. If taxpayer gives satisfactory reply to that, and that's why this is a very, very important change, and litigations will certainly reduce, and we should read this change along with the announcement of dispute resolution committee. Both put together will certainly create a very positive atmosphere as far as litigation is concerned for small taxpayers.
Okay, so yeah, essentially then if your income is below a certain amount, if your tax is below a certain amount, you'd come under the category of small taxpayers, and once you do that, obviously then the whole process is sort of eased out a little for you. I want to talk to you about this vivace vishwa scheme. I think the latest numbers say that 97,000 crore rupees worth of monies has been offered under the vivace vishwa scheme. I want to know, what do you think of it? I mean, it was introduced in March 2020. It's been close to a year now. Who do you think should opt for it?
See, vivace vishwa scheme, slowly the scheme has taken pickup. Initially, there were lots of apprehensions in the mind of taxpayers, but now the numbers are speaking for itself, because almost 24.5% of the total disputed cases have opted for vivace vishwa scheme. So my personal opinion is that the cases where their legal interpretation related matters are there, in those cases, the taxpayers can certainly go for this scheme, this vivace vishwa scheme, because in interpretation of the legal provisions related matters, there is quite a well scope of prolonged judicial review, prolonged litigation, and for taxpayer, what matters is the quick resolution of the issue, because then he can concentrate on his running business. So if the issue involved is a legal issue where the matter is of interpretation of the provisions, then in that case, the taxpayer has this vivace vishwas is a good option to go for it, because what will happen, there will be the no interest, there will be no penalty, there will be no prosecution. So only the tax has to be paid before 31st of the March, and then the matter will be ended. And even that's why this is a very good option if there is a legal interpretation related matter, so that the taxpayer can keep the litigation under control and get a quick resolution of the same.
Okay, understood. So yes, this. I mean, the proof is in the pudding, really. 97,000 crore rupees is definitely not a small amount. And this, the CBDT has said that they have received as, disclosures by assessees in this vivace vishwa scheme. It's been, less than a year? And, definitely not a bad one, which sort of, I guess, instills faith as well for other assessees, perhaps, to opt for this. What's your experience like, Sujit, or what you've heard of when it comes to faceless assessment. How do you think it's gone? I mean, of course, with COVID, everything was anyway faceless. So I guess it's a good thing that, the government, the department, was able to implement this entire process well in advance. But how has the experience been? Because now we have the ITAT, which is the next level of, appealing, to the department cases too. That's going to go faceless as well.
So, as far as faceless assessment are concerned, one thing we should understand is that e-assessments have been there for last few years. Last 3-4 years, department is carrying out e-assessments. Means e-assessment, the questionnaires will be sent on mail, the response are sent on mail, or responses are submitted over the income tax utility, income tax portal. So, e-assessment is prevalent for quite a few years. Now, it has been made faceless. That means in e-assessment, who is the assessing officer, who is issuing questionnaire, who will conduct the assessment, that was known to the taxpayer. Now, in the faceless assessment, nobody knows who would be, if my case is in Kutni, I don't know who would be my assessing officer. And there will be different for assessment, for drafting different, for review, there will be different. So now the whole process has been made faceless. But as far as taxpayer is concerned, my thinking is that as far as taxpayer is concerned, it is just like e-assessment which was into prevalent. So the faceless thing will only bring a different tax authorities into the picture, who are unknown to the taxpayer and at different levels of assessment. So that's why it is just like e-assessment with not knowing who the assessing officer is, keeping that anonymity there, and that's why it is just like earlier e-assessment. One thing is there, any system, any new system comes into the arena, it takes certain time to cope with that, to get adjusted to the system. So this will certainly take a little more time from taxpayer perspective, from tax practitioner's perspective, to adjust to this system. But obviously, this is a very good measure as far as taxpayer is concerned, because he need not go to the offices. He will certainly sit in his home. He certainly sit in his office. He can compile the responses and file the responses. So that's why this faceless thing is a really good, and slowly it will adjust. It will settle down in the coming certain times. Now, as far as ITAT is concerned, this budget has made ITAT proceedings faceless. I personally feel the benefit of this will be the quick resolution of the cases, because the tribunal most of the times cases gets prolonged due to certain issues on attendance because of the logistics and other concerns. So first and foremost, the issue will be quick resolution, because the cases are being held on video format, and those are electronically. So the cases, the speedy disposal can happen. And certainly for expanding the narrative of honoring honest, this is a really good measure by Government of India. This will instill confidence into the minds of honest taxpayers. Certainly this is a good measure.
Oh yeah, absolutely. That's, I suppose anything that's new does tend to have those initial teething problems, but as assessees, as the department as well, sort of their experiences grow with a new product, it sort of, becomes easier for everybody. And anything that's digital is always there to make your life easier. And I suppose this will be the case with this too. Okay, let's just take on board some questions and queries meantime on taxation that we have received from our viewers. Remember, folks, if you'd like to connect with us, you can write into us on themoneyshow@etnow.tv. Well, our first question is from Ayan Chattaraj. He asks, please advise whether I should choose PPF or NPS for retirement corpus building and tax saving. I suppose this question is very much related to the budget announcements because, Sujit, we had the FM saying that if you're going to put, okay, this is PPF, pardon me. The thing that I'm talking about is EPF. But yeah, nevertheless, since I've brought the topic up, let me remind our viewers that now if you put more than 2.5 lakhs in your EPF, the interest on that will be taxable. So yes, PPF versus NPS, What's your view on this, Sujit?
There is no doubt. If my suggestion goes to NPS. NPS is the best option for investment. It will take care of your retirement. At the same time, it will help you to grow wealth. It will give market-linked returns. At the same time, as far as recent changes are concerned, you can have 60% lump sum at the time of retirement, and that has been made totally tax-free. As far as ATC related and tax deductions related investments are concerned, the advantage of NPS is that most of the times what happens, our ATC brackets gets covered up with our home loan principal or tuition fee and other compulsory things which we do in our due course. So NPS gives us option of 50,000 more tax-free investment beyond the 1,50,000 of the ATC. So that's why I personally feel NPS is a very good option, and one should certainly go for it. And the returns are really good, and you can certainly create a good amount of wealth. So my choice will be for NPS 100%.
All right. So without a moment's hesitation, the NPS is the go-to product for Sujit, especially if you have to compare it to PPF. Okay, now Divya Jindal is asking a question which is related to the announcement from the budget. She says, interest earned on employee contribution to PF exceeding 2.5 lakhs is taxable. My query is, will this interest be taxable on an earned and accrued basis or taxable only at the time of withdrawal of the Provident Fund? What does your reading, Sujit, say of the, based on the budget speech and the announcements?
This is a very peculiar query into minds of taxpayer post this budget announcement. The Provident Fund, this contribution, if it is exceeding rupees 2,50,000, then the interest will be taxable. That is the announcement which has been made into the budget. Now, one thing we should understand, when the budget says that the interest on the contribution beyond 2,50,000 is taxable, that means that taxability is at par with the interest of fixed deposit. So the interest which you are getting from this Provident employees contribution to the Provident Fund, taxable beyond 2,50,000, it will be taxed just like any fixed deposit. Just like any fixed deposit was being taxed like that. So that's why it will be taxed on year basis, and you can have the analogy of the fixed deposits interest taxation for that. So certainly my answer is that it will be taxed year on year.
Okay, so it will be taxed year on year, make no doubt about that. You'll have to pay tax every year, or at least the year in which you deposit more than 2.5 lakh rupees. So the interest on that, you'll have to pay tax every year. Okay, Samba Siva asks, I have one query on LTCG or long-term capital gain. If the person is not having any income in a given financial year and he has 3 lakh rupees of long-term capital gains enjoyed on mutual funds, does he have to pay tax on that 2 lakh rupees of long-term capital gain, 2 lakh rupees, because 3 lakh minus the 1 lakh exemption, so that's 2 lakh, or will it be zero because he has no income? Interesting question here. Sujit?
Yeah. So the first thing apparent from his question is that he doesn't have any other income apart from this long-term capital gain, 3 lakh rupees long-term capital gain. And as already he has mentioned in his question that 1 lakh is exempt. He is aware of that. That's a good thing. So one long-term capital gain on equity mutual funds to the extent of 1 lakh for that year is exempt from taxation. So in your case, taxable long-term capital gain is 2 lakh. But as you don't have any other income and your total this amount is below the taxable limit, practically there won't be any tax for this. So you need not worry about that.
Okay, excellent. Just before I let you go, actually, Sujit, wanted to ask you also about the fact that we are under 2 months away from the end of FY21. So just to ensure that our viewers are not waiting till the last minute, because it's highly unlikely that the FM will give an extension on your tax planning and investments for this year as well. How would you recommend individuals, assessees, invest their money in different tax saving instruments for the year FY21?
See, I will have two sort of suggestion. First suggestion, they should take care of 3 steps, and the second suggestion is related to new and old tax regime. So, if I have to do tax planning, then today I should sit down and I should analyze what I have done in last few months. In this financial year, today February is going on, just 1.5 months has remained of this financial year. So just analyze in last 10 to 11 months what we have done, how much tuition fee we have paid for our kids, how much health insurance premium has been paid, whether we have done any health checkup and what was the cost for that. If we have purchased home, then what was the principal which has been repaid in EMI, what was the interest component of EMI, and all these things we should jot down, and we should work out how much tax saving investment and how much tax saving expenses I have done during the course of my 10 to 11 months. To identify what much is the portion available with me to take care of this tax saving. So 1,50,000 is the ATC bracket, and just take care of this, take analysis of these, how much investment and tax savings expenses I have already done, reduce that from 1,50,000. For example, if my total tuition fee for my kids and my principal for my home loan EMI, and these things are covering around 70,000. That means I have 80,000 as a bracket which is available with me for tax saving. At the same time, if my total income is is more than 8 lakh, more than 10 lakh, then in that case, certainly I need to go beyond ATC. Then I need to look for certain tax saving option. Can those be there beyond ATC which can save society? So, and after that, my third step will be exactly shortlisting which can be the tax saving options. And while shortlisting those tax saving options, the most important thing which should be given primacy is that what is my age? If I into my 20s and 30s, then my goal should be to create wealth at the same time while the saving on the taxes. So for me, ELSS is a good option. If suppose I have to save beyond ATC because that margin is available with me and I have that cash flow to manage the payments, then I should go for NPS. And why NPS good? Earlier I have told. So these 3 steps should be followed by the taxpayer. Now the new things comes, which is the very peculiar, and this is the first financial year with respect to that. So this is whether I should go for new tax regime or whether I should go for the old tax regime. See, catch here is that in new tax regime, I will have to pay lesser taxes and without requiring any investment done. So when it will be helpful to me, it will be helpful to me to save certain cash. If I have to conserve cash for certain planned expenses and at the same time I have to pay lesser taxes, then I should go for the new tax regime. But be aware, in new tax regime, we don't get any deduction. Even standard deduction is also not available. And as far as old tax regime is concerned, if I have no issue about the cash outgo, my cash flow is pretty well and I can manage my investments, then, and at the same time, I want to do my full-scale wealth planning, I want to create wealth while saving on taxes, then I should go for the old tax regime. But not everybody's case is just perfect as this A and B. So for those taxpayers, my suggestion is that do certain permutation and combinations. Firstly, take out, as I said, as a first step, things which you have done unknowingly, tax saving investment, tax saving expenses, and see how much tax you have saved and analyze with just those tax saving investment and those tax saving expenses, whether new tax regime is good or old tax regime is good. So it will give you a very informed and wise answer for that. And last point on this, to conclude on this tax planning, I want to tell taxpayers is you have option to select new and old tax regime at the time of filing income tax return. For the individual salaried taxpayers, that option is there while filing your tax return. So don't worry about that. Just now do planning with certain taking some informed decision, and don't worry about whether I will be then blocked in one tax regime and I cannot change it. You can change it while you are filing a return. So just go ahead and do the planning because time is running out.
Sujit, yeah, absolutely. Sujit, we'll let you go on that note. Thanks.